Uh, Hey, good morning, Drew. Thanks for making the time. It's good to see you again. I know it's been a while since we chatted. Tell our audience what you've been up to. I know you and your brother have been very busy, and of course the MAG team has been very busy, but tell us what you've been up to.
Sure. Yeah. Hi. Hey, Bobby. Always good to catch up, talk with you. Yeah, we've been up to more of the same, our usual focus. We've been doing a lot of single tenant industrial real estate acquisitions, long-term triple net leases. We've had some great equity offerings we've been offering this year. We've had a couple debt offerings as well, but all really with that basis of that single tenant property with a long triple net lease and a really strong tenant backing that lease.
Excellent, excellent. There's a lot of investors that love the fact that they get this steady income with almost no headaches. Tell the viewers who are not familiar with what is triple net, and what does that mean, and what does it signify, and what's the benefit of a triple net over the traditional equity investing.
Yeah, triple net lease, that means that a tenant really holds the responsibility of utilities, of insurance and property taxes. All those expenses are paid for and managed really by that tenant. And our leases often, we kind of refer to them as absolute triple net, meaning that the tenant's also responsible for all maintenance, capital expenditure items. So we really want a hands-off approach. That's what we're looking for, is the ultimate passive investment where the tenant takes on that responsibility and says, hey, we're going to manage and pay for these expenses of the property. So, there's a little trade-off. They pay a little bit less in rents, but they handle this. And what that means for us and our investors is a really consistent cash flow, because what's coming in without any expenses eroding it from 1 month to the next or 1 quarter to the next. So that, hey, our operating income here is really going to be untouched because we don't have expenses to pay for.
I love it. Yeah. So for many traditional real estate investors, that expense and that uncertainty is something that keeps them up at night, and knowing that they may have to replace a roof, or they may have to replace an appliance, or maybe have vacancies, evictions and all that. But in your case, you're dealing with corporate clients with very good balance sheets, very good credit worthiness. And so tell us a little bit about what happens in the underwriting process as you evaluate these opportunities. What are the things that you look at to evaluate the tenant?
Sure. Yeah. The fundamentals of the real estate come first. And that's, kind of going without saying a lot of times, but of course we want to know that we have a good value there. But really, on top of that, we spend a lot of our time evaluating the credit of this tenant. These are commercial businesses doing, B2B sales many times, where, food producers or equipment manufacturers, parts manufacturers, all kinds of different industrial sort of tenants. And so these are private credit tenants. These aren't publicly traded generally, and still very strong tenants, but you have this sort of you have to sort of look into this tenant's financials, their balance sheets, their income statements, and those are the basics. But going even further than that, looking at how concentrated their revenues are coming. Are they getting most of their revenues from one customer? We don't want that. We want a diversified customer base and industries that they may be serving. You want to look at what kind of debt levels they have and what are some of the covenants around those debts that they hold. And it's okay for a company to have some debt, but is it a manageable amount? Are they producing enough profit to pay for that debt and continuously growing that income and using that debt to fuel the growth of the company? So there's a lot of different pieces there. We have a credit analysis team on hand here, and they do a great job really writing up an institutional grade credit memo to kind of synthesize all of what we've learned about a tenant
Got it.
into onto paper, really. And we share that with investors and say, hey, here's everything we've learned. We want to kind of show that to you. And it's everything from raw financial data to sort of description of the management team and where they've been and where they plan on going and how they intend in a sale leaseback, which we do a lot of. These are companies we're purchasing the real estate from. They're taking these proceeds. What are they doing with this, right? They're using this usually to strengthen their balance sheet or grow the company by investing in new equipment. So there's a really deep due diligence done there because we want to, at the end of the day, understand who this tenant is, where their financials have been and where they're going and how strong they are. And ultimately, we're able to find some really strong tenants after reviewing everything there and finding out that, hey, we have a strong tenant behind a 15 or 20-year lease. We feel really great about this investment.
Got it. Got it. Excellent. Excellent. Um, and as far as, these opportunities, are they nationwide, or you focus on certain geographical regions, or where do you, is there any focus on geographical regions?
Yeah, we're pretty agnostic, You at the end of the day, you sort of look and people sometimes say, "Oh, I want to stay away from California." They have very restrictive eviction laws and things like that. And I think anyone really just has to look at a deal from top to bottom and kind of say, "Hey, look, does this make sense?" Because maybe there is some, in the case of residential housing, there is some benefits and tenant friendly laws in California, for instance, when it comes to residential. So, yeah, maybe that's something you have to look at. But if you have a great deal, you say, look, I can deal with some tenant issues possibly. We're in a space where we're dealing with, commercial businesses. So I really enjoy that piece of it. We don't deal with a lot of that, the personalities that come with tenants in multifamily, for instance. So, but these types of businesses, manufacturing, these guys aren't setting up shop in Silicon Valley usually, right? These guys are setting up shop somewhere where there's a low cost of wages, low cost of overhead, where they realize they're distributing products generally nationwide, if not globally. So where are they setting up shop generally? It's in the Midwest, the Rust Belt, the Sun Belt down south, the Southeast and Texas. So, I mean, really where we've seen opportunities more frequently is Texas and the Midwest, in the Ohio's, Indiana's, Illinois, Minnesota's, those states, and even down kind of Bible Belt area, if you know what I mean here. So there's all these areas where there's really access to labor at a fairly good price, and the labor there is able to support whole families and whole households with those wages. So
Good one,
it's
yeah.
a really fantastic place for them to set up shop, and that's where we find these types of tenants, these types of properties that we like to work with.
Awesome, awesome. And last question on, are there, you know, are there any trends such as, refrigerated warehousing, or are they, or the Amazon fulfillment centers, or have you gotten into that kind of investing in your portfolio?
I think did you mention cold storage?
Cold storage.
I love cold storage. It's fantastic. It's high demand. It's extremely high cost of development. So if you could find a property there and something that's already built, you have so much inherent value there just by holding a property that's already built. Again, we're talking about 50 to 60% higher in construction costs than a normal industrial property, just due to all the insulation, as you can imagine, that goes into the construction there. So love that asset class. When you get into the sort of fulfillment centers with some of these credit tenants, Amazon, Home Depot, Walmart, all these guys, these are extremely safe credit tenants. Anyone would love to have a company like that guaranteeing a long-term lease because you could sleep easy at night. You'll never even think about these guys going under or having any kind of issues paying rent, right? However, they really attract a lot of institutional money, and they're looking for a very safe place to park their cash. So really, it drives the pricing at such a level that It's frankly, you're not seeing much yield. You know, you're about keeping up with inflation at that point, with the level of yield you're able to achieve there. So we're looking for higher yield, and where we find that opportunity again is with these private credit tenants. They're not publicly traded. There is some unknown credit rating. They don't have a credit rating from the financial institution. So we have to do our homework and really learn about them and find out, hey, is this a tenant that we want to do a deal with? And sometimes it's not, but many times we find that, hey, there's actually a delta between the perceived level of risk around this tenant and the actual risk. And that's where we find that opportunity and where we're able to find some real yield, because, you know, we're looking for high single digits cash flow. We're looking for some rent growth through this long-term lease with rent increases built in, you know, so we can see profits when we exit at, you know, anywhere from year 3 to year 7, depending on the deal. So yeah, getting into the credit tenants, those national credit tenants like Amazon, you know, it would be great, but it's just really a very thin margin, a very institutional world where people are okay to achieve, you know, 3 to 4% in cash flow, which is, again, you're just about keeping up with inflation.
I got you. I got you. Makes sense. Makes sense. Beautiful. And then lastly, Drew, where can people find you?
Yeah, they can email me directly, drew@magcp.com, or you can go to our website, magcp.com, and check us out. We have a little, you know, if they're interested in investing alongside us, there's a little registration form there. They can come along, or you can find us some information about us through your site. So
Absolutely. Absolutely.
come check out.
Bettercapital.us. Bettercapital.us, go to partners and you'll find MAG Capital over there. So, but yeah, magcp.com or bettercapital.us, and then partners, and then MAG Capital. So thank you. Thank you, Drew. I appreciate you always making the time, and you know, just always good to catch up with you know, what you're doing. I really, you know, respect the niche that you have found, and it's for, you know, solid, you know, sleep well at night kind of a niche. So you know, I encourage people to check out magcapital.cp, magcp.com. So you know, do that. But thank you, Drew. Thank you for your time, and
Yeah,
we
appreciate
will
the
do it again.
partnership. Always
You
good to
bet.
be
You
on
bet.
here. Thanks, Bobby.
Likewise. Thank you. Thank you, Drew.